Hello friends, welcome you all. I am Sundar from Symphonia Wealth. The topic what we are going to see today is India heading into recession? In fact, almost every day we have started speaking about recession, interest rate hikes and inflation and many other things which generally scares investors. So in this video we are trying to see whether India is likely to slip into recession or is it the Western world. In one of the recent surveys conducted across countries, what is the probability of India falling into recession? The probability came to be 0. In fact, many developed countries, especially the US, UK, Eurozone, most of them are likely to slip into recession, whereas India will not be slipping into recession. So as investors who are investing money in India, I think that's a lot of relief. Of course, there is a lot of volatility in the market at the current levels because when the globe is going through trouble, India cannot stand alone when it comes to capital market. But I'm going to show you a lot of data which will give you a lot of confidence in the Indian economy. One of the main reasons for recession expected is the rise in inflation. In fact, the rise in inflation in US and UK is almost at a 4-decade high. So they've not seen an inflation of about 8-9% for almost 40 years now. But as we speak now, most commodities which fuel the inflation, most commodities have actually corrected. One, because when the Western world is getting into recession, naturally the commodity prices demand is likely to cool off, and because of that the commodity prices have already started falling down. So right from the base metals to the agricultural commodities, the chart clearly shows that most commodities have actually fallen anywhere between 10 to 50%. So which means the pressure on inflation over a long period of time is likely to get better. Another major tailwind for India is when the Western world is likely to get into a recession or into a slow growth mode, naturally the commodity prices declines and India will be one major beneficiary when the commodity prices decline, especially when it comes to crude. But in spite of all the negative news which is all around, there are a lot of positive news when it comes to the domestic Indian economy. So one major news item which you all would have read in the newspaper also, that iPhone 14 is going to be manufactured in India for the first time. So which means finally the made in India story is playing out, and iPhones are going to be made in India for Indian customers. Also it's going to be export hub where a lot of phones will be exported out of India also. So which means finally the manufacturing which has been missing in India for a very long period of time is again coming back. And with the recent PLI scheme announced by the central government, there is a lot of positiveness when it comes to manufacturing. A lot of companies are setting up manufacturing hub, so which can actually propel a lot of economic growth in the coming years. So that's very visible when it comes to the PMI number for India. The PMI number is very strong, which is in the range of about 56 and 57, which clearly shows that there is a lot of positiveness when it comes to the manufacturing sector. Even the service PMI number is in a very good position. And if you look at the direct tax collections, which clearly shows that the number of individuals who are making money have increased, and because of which the direct tax collection also has gone up by about 30%. One, thanks to the better tax net, and also the real economic growth is also visible, which is a very good indicator when it comes to economic growth. Another major indicator is the credit growth. So how many companies are borrowing money? So they are borrowing money because they are able to foresee that the future is going to be bright. So they are actually borrowing money today from the banking system, and they are actually investing to expand their operations. So which is very clearly visible because after a very long period of time, our credit growth is actually close to about 13-14%. In fact, it can go up much more in the coming years. The next very important indicator is how are the companies' profitability growing. If you look at the profitability to GDP when it comes to the Nifty 500 companies, which are the large and the bigger companies of India. So if you look at the overall percentage from a low of about 2.2% of profits to GDP has actually started going to about 3 and 3.5%, and as we speak it is almost close to about 4%. So which means broadly many companies profits have actually started increasing, which clearly indicates that the economy is on a very strong wicket. Also with the recent corrections in the equity market, the valuations both from a PE level also to the price to book level is actually become a lot more attractive, and it is actually close to the long term average, which means as investors One, the entry point for equity market is relatively better because of the recent corrections. Second, the future for the Indian economy looks much brighter. So there is no question of India getting into recession. In fact, the probability is zero. And more importantly, many companies are making better profits, the credit growth is increasing, and overall there is a lot of optimism. So believe in India and believe in India's long-term growth story and stay invested for long term. Thank you for watching.